In this video, I'm going to share, I'm going to show how to close the accounts at the year end. We have 4 processes. The first one is to close all revenue accounts. Second is to close expenses account. Then we're going to close the income summary account, and finally is you're going to close your drawing account. Let us do one by one. So in this example, you are given these assets. Your revenue, you have 2 types of revenue: fees earned and rent revenue. You have 2 revenues. Okay, as you have learned before, revenue is a credit balance account, so you need to debit this account in order to close this account, to have a zero balance. So for fees revenue, I'm going to debit the accounts, and for rent revenue, I'm going to debit the account by 50,000. Okay, and then transfer it to income summary or profit and loss. You can use profit and loss, or some textbook they use income summary. It's the same. Income summary, credit by 60,000. So this is the accounts. I've drawn the accounts. This is your fees earned account. Okay, you have 10,000. So to close this account, you debit 10,000. So the balance will be 0. Okay, the balance will be 0. So debit all the revenues account and then credit your profit and loss or income summary. That is for revenues. For expense, we have 1, 2, 3, 4, 5 expenses. The first one is salaries, 5,000, telephone, 6,000, interest expense, interest 7,000, insurance 8,000. So how to close this account? All these are debit account. So to close this, you need to credit the same amount. Credit. So salaries expense, credit 5,000. Sorry about that. I should bring it here. Telephone expense, credit 6,000. Interest expense, credit 7,000. Not credit. I should put it the other side. Credit. Put it here. Yeah. Okay. Insurance expense, credit 8,000, and income, profit and loss account or income summary, debit 26,000. The total debit 26,000.
Professor, I had a question.
Yes, please.
All right, so we're supposed to debit the revenues in order to close them, and we credit the expenses in order to close them. But for profits and loss, how come it changes? Like the first time you said to credit it, but now you're debiting it.
Good questions, yeah. Okay. This is your fees account, yeah, 10,000. This is your rent account, 50,000. Am I right? And then you have one account, temporary account. I call it as income summary. Okay. If you want to close this 10,000, okay, you need to debit the amount 10,000 here. So which account you're going to credit? So one debit, another account should be credit. All right. So you're going to put here 10,000. So deals we have a 0 balance. For your rental revenue, so this is revenue. So this is also revenue. We have 50,000. To close this account, you need to debit the same amount. So I'm going to debit this account by 50,000. So now the balance is 0. So which account I should credit to complete this transaction? One, the credit account will be your income summary. So this is 50,000. Or I can put it together, lump sum, as 60,000. Yeah. Whereas for your salaries, telephone, interest, and insurance. This is your salaries. Telephone, interest, insurance. You have a balance of 5,000, 6,000, 7,000, and 8,000. How to close this account? How to close this account? Okay, you need to credit the accounts by 5,000. So which account you're going to debit? Use the temporary accounts here, 5,000. 5,000. So the balance will be 0. For telephone expense, credit 6,000. So the balance will be 0. You don't need to put the 0, yeah? Was well understood. So this will be debit here 6,000, interest expense 7,000. So I'm going to put here 7,000 and insurance expense 8,000. That's why I'm putting here 8,000. Or if you total it, 8 plus 5, 13, plus 7, 20, it should be 26,000. Or in a simple way, I can say I'm transferring all these 4 accounts or aggregating all these 4 accounts and put it into one account known as income summary. That's another way to explain it. Yeah? Yeah? Instead of closing, I say I aggregate the accounts, okay, and put it to income statement or move it to income statement. So that is why we have income summary, 60,000 credit and 20,000 debit. The difference is your profit. The difference is your profit. Okay. The next one is your profit. Your profit. You know that your profit is 24,000. 24,000. Your profit is 24,000. This is your profit. Yes, you can use the income summary or profit and loss summary. It's the same thing. No worries. Yeah, I accept both. So in this example, we use profit and loss, or you can use income summary. Income summary. Which one convenient for you? So you're going to we're going to is it 24? No, not 24. Is 34. Sorry, 34. 34. Sorry, 34,000. So you have here your profit, your revenue 60,000, your expenses 26. So your profit is 34. So how to close your income summary account? You're going to debit your account summary account by 24,000 and transfer that amount to your capital. So your capital increase. Your capital increase by 34,000. Okay, this is the next one. I'm going to put it to your capital. So your capital increase 34,000. And finally is your drawing. For example, you have a drawing of 15,000. Drawing is a debit account. This is your drawing. Debit 15,000. So to close these accounts, you should credit these accounts. So the balance will be 0. You are going to put it to your capital accounts. So in your capital, you're going to debit your capital account 15,000, credit your drawing by 15,000. So this is step number 4. This is step number 4. So what happened to your capital? If you have a capital of 100,000, this is your capital. Your capital debit balance 100,000. And then from your P&L or income summary, this is your balance, PD. For income summary, you add 34,000. And then from your drawing, 15,000. So your capital, your new balance for capital is 100,000 plus 34,000 minus 15,000. So your capital balance CD is 119,000. So this is your capital. If you compare these accounts with your statement of changes in equity, you will see that you'll notice that this is the same thing as your statement of changes in equity, whereby capital plus net profit minus drawing. So this gives you the balance. So that is the last step. So at the end of the year, after close all the accounts, we don't have any revenue accounts anymore. Everything will be zero. Your expense account will be zero. Your profit and loss account will be zero, and your drawing account will be zero. Your revenue and expense accounts you transfer to your income summary. Sorry, your income summary or profit and loss. Your profit and loss you transfer to the capital, and drawing account go to your capital. So at the end of the day, all these four accounts, revenue, expenses, income summary, and drawing will end up in your capital. So that is why your capital will increase. Okay, let me explain again. During our first lecture, I did tell you that you have capital. You start your business with 200,000 capital cash. But at the end of the year, when you check your account, cash, this is your capital, cash capital. But at the end of the year, when you do accountings, you after making a lot of sales, running the business, you have very good business during the year, your capital won't be 200,000, it can be 260,000, for example. Why? Why the capital grow? Because your revenue is more than your expense, and you don't take cash, bring it home a lot for your personal use. So that's why the capital grow. That's why when people run business, they make a lot of money. Why? How? When they able to generate more revenues than what they spend for. But if you run a business, your expenses is too high, so this capital 200,000 won't be 260,000. It can be less than that, because loss reduce your capital, profit increase the capital. Okay. I'm going to explain the last part, that is list and describe the step in the accounting cycle. So during the accounting cycle, we start by analyzing the source document. What is the source document? What is the source document? Maybe the invoices, a receipt, bills, Generalize the transactions. This is what you did in the third questions, Journal debit and credit. Post to general ledger, or known as T accounts, and then prepare the trial balance. We did this in our question 3, and then from there we're going to prepare adjustment, and then finally we're going to prepare end of period worksheets. End of period worksheet, and then we're going to generalize and post the adjusting entry, prepare the income statement of honest equity and balance sheet, and then journalize and post the closing entry, and finally prepare the post-closing trial balance. It's a long process, but we have reduced the steps with the use of technology and so on. Okay, I think with that I end the first part of the lecture. So we're going to continue again after the break. Do you have any questions for the time being? Any questions?
Sir, so the profit account is the same as the income summary account?
Yes, Jana. Yes. Yes, Adibulanli. Yes. The same. Yes, the term. Some country they prefer to use profit and loss. Some country they use income statements. So for if you
Okay.
use the income statement, maybe the term income summary is more closer to you. But if you use profit and loss, so profit and loss summary is more acceptable term that. So but I accept both term. No worries.
Right.
It's just a temporary accounts, yeah, to close the accounts. Okay.
And
So
you did one more thing for the capital, sorry, for the capital accounts, like you put the income summary on the right and then drawing on the left. Is it always like that, or how do you know where to put it?
okay, let me go back to the this one.
Um,
Let me show you. This one, this is the income summary.
yeah.
This is the drawing. Maybe we should draw here
Yes.
the capital accounts, yeah? You have your capital accounts.
Yeah.
This is your capital
Yeah,
accounts.
this is it.
This one, yeah?
Yeah.
Okay, let me go back to this. Always remember that your equity balance is on credit side. This is your capital. Your equity is on the credit side. For example, 100,000. This is your balance. I call it balance BD, brought down. Okay.
Okay.
When you make profit, you will increase your capital. That's why I put here income summary 34,000, because it increased your capital from 100,000 to 134,000. Okay. And you have drawing will reduce your capital on the credit side. This is your drawing. Okay. Please imagine, yeah, if you don't have drawing, what happened to your capital? Your capital will be 100, the balance of capital will be 134,000, much greater, right? So this is our balance, 134,000. Your capital has increased from 100,000 to 134,000. So if you don't have drawing, but we have drawing here 15,000. So that's why our balance of profit now is, and the capital is 119,000. If you make loss, you have a loss. So what was going to happen? If you have loss, this will be your income summary here. For example, you lost 10,000. So your capital now reduced 100,000 minus the drawing 15,000 minus the loss 10,000. So your capital now is only 75,000. So this is for loss.
Oh, okay. Yeah.
This is
So
for,
anything that will reduce it will go on the left side, like drawings and a loss, and anything that will increase it is the profit on the right side.
yes, correct. MashaAllah. Very good. Yeah. So anything that
Okay.
increase capital will go to the right side, credit. Anything that reduce it will go to the debit side. Okay, that's very good explanation. Thank you so much for the questions.
No, thank you, sir.
Yeah.